Okay, good afternoon, everybody. Today is January 7th. It's the new year, 2022. The market just closed. It's just after 1 o'clock Pacific time, my time. This will be your weekly take on the market. No, I missed a couple of weeks, the holidays, and I just didn't see the markets are basically doing the same thing, and we'll talk about that. I'll be your host. My name is Scott St. Clair. I'm the product group manager for premium products here at IBD. Here is the disclaimer. We will talk about stocks, etc. I'm not licensed, so everything we talk about is for educational purposes only. So you can do this on your own. So we'll talk about the markets, the indices. Then we'll go into the industry groups. We'll highlight a few stocks to watch, and then we will do the quote of the week. All right, so you should see my chart. Got the IBD mutual fund index. So why don't we start there? I'll talk about it for sure, but we'll start there. I think it's due to scaling, but I've always wondered why the relative strength line is across the top here, but you can see it peaked I bet that's February. Yeah, I think, and I know it's crazy based on the indexes and the average person wouldn't understand, but I think the bear market started in February. And I've mentioned that before. So here's the relative strength peak in the mutual fund index. You made a higher high, you got a negative divergence. You made another higher high, you have another negative divergence. So the market's been diverging. You've heard about the breadth being poor. Most people, I don't know, I don't get a lot of feedback that people are getting hurt. You might be losing, you might not be doing as well as you'd like if you're trying to hold on to some of the bigger winners you had. But the signs have been there. This weakness should not have surprised anyone. The timing of it is the hard part, because you start to recognize this weakness, and you're just early, and so it's hard to stay the course. You start to question, am I really seeing what I'm seeing? But this week proves that it's the growth stocks are in a bear market. The mutual fund index was down 5% this week. If you open up the panel, year-to-date performance, look at some of them are already down 7% for the year. This is only the first week. T. Rowe Price, New Horizons, a very good fund, great track record, down 8%. Contra is down 3.4. They have a lot of big caps, so probably holding up a little bit better versus the others. But this is not good. The action's not good. This is the first close. Well, there's a couple of closes right there, but this is really the first decisive close below the 40-week in a long time since the bear market there. Let's look at the NASDAQ. And this might not be up. I wasn't watching super close. I don't think there was anything dramatic in the last 20 minutes. This is probably what it looks like. You can see the relative strength. It's practically making a new low. That's close to a 52-week low. Relative to last time the relative strength was here, the NASDAQ was at 13,000 and it's at 15. So really relative to S&P, and NASDAQ's just being held up by the strength in the overall market, the S&P. And if the S&P really starts to get going, this has been the laggard. It could really waterfall. I don't know if it's going to or not. I always get nervous on lowers, going lower when we undercut lows, because that's like the obvious point when you undercut some lows. And this market has not stayed below any significant lows. You can see like you have a low here, low here, low here. We've never gone down and lived below a previous low. So if or when that happens, if we go below this and start to live below this previous low, then you're probably, well, like I said, I think we're in a bear market for our types of stocks. It's just kind of it's just a different, the market is so it's like a chameleon. It's just constantly changing. And for the growth stocks of the world are not acting well. S&P right on the 50-day, barely off the highs. So, but S&P is going to have some stocks that are holding up really well. Oil and gas, maybe the REITs, although I don't watch them too closely. Maybe they're holding up better. The money kind of has to go somewhere, the old 60-40 approach, whether you're young or old, 60% bonds or 40% bonds, 60% equities. It's kind of an old system with, I'm like 90% cash. And I was just like looking at what TD Ameritrade pays me. And it's like ridiculous. It's so bad. And I have all this money just not earning anything for me. It's tempting to want to find yield, to chase yield. What's the saying? More money has been lost chasing yield than at the point of a gun. You have to be careful of that. So I was looking around for things, like I know that this closed-end fund, it invests in Asian and Australian debt, and yields 8%. I was tempted to buy that. It's not really what I do, though. What good is 8% if it goes down 16%, right? And that's a big fat 8% loss, as Bill would say. But a lot of people don't have the discipline just to earn nothing, right? It's better to have that cash ready for the next up leg. And so that's kind of why I think the S&P holds up better because there are products and companies in there that people are probably owning to, try to get a little bit of return on their money. Emerging markets, are they holding up at all? Practically given up on them, but it's wow, look at that, turning up, relative strength. Nothing there, just been dead in the water for a long time. Russell 2000. I did notice VTV, which is the Vanguard Value Fund. That's very, very close. If it's not, it's one day from a all-time closing high. And you can see the relative strength is for an ETF is pretty good. So maybe money is trying to hide there. The yield on this overall is 2.1% in that one. But for our style, if you're investing in growth stocks, you're probably on the sidelines mostly. It would be my guess. The industry groups. Semis, that's NVIDIA, etc. But even those like AMBA got torched the other day. They'll hold up, and then they'll get them. You have to be careful. Oh, it's holding up. It's doing okay, but they'll get those. NVIDIA, for example, first close below the 10-week in a long time in the pretty much the whole uptrend. Maybe you got two closes below there, but not a bad close. It's pretty constructive tightness right there. Media periodicals. Gosh, I don't know. What's a media periodical stock? There's 3 of them. We're going to move on from that. Auto, Tesla, of course, looks broken. That would be one of my stocks to watch. Broke out of the base by just a few dollars. And so this could be considered potentially a late stage base failure. It's stage 3, but let's look at the monthly chart on Tesla. 20 to 1,000. Is that a long way away? Sure. I know that a lot of people think Tesla can go to 3,000, whatever. Fine. That's fine. Congrats. But I'm just thinking, forget this is Tesla. Look at the chart. It's a later stage base and it's a failure. That's a nasty close so far. So if you bought that, you should be out. If you own it way down here, like some people do, and I have some friends that own Tesla in great spots, incredible spots, and they're going to try to sit through the volatility. And one of my friends, he knows himself really well, and he's sat through this and he sat through that, and he'll probably sit through this. So, but if you got to kind of know your plan and know that you can do that, doesn't do you any good to say, well, I'm going to sit and be a long-term holder And then if it goes down to 600, then you just can't take the pain and sell it. You're better off selling at 1,000, moving on while it's the going is good. So that looks tired and broken. Oil and gas, Canadian, holding up really well. One name that I own, Devon Energy, just acting really, really strong. Relative strength 99. Nothing wrong with that. Doesn't know anything about the sell-off so far. And so there is places to be invested if you must, right? Telecom, fiber optic, retail, supermarkets, transportation, truck has been holding up pretty good. But then the last few days, they got these ones, right? ArcBest, failure, breakout. What else is in the group? There's one other that seems pretty good. ODFL, is that the one? Yeah, it's not too bad, not as bad, but looks a little tired. So there just isn't too many places to hide. So that's the groups. Stocks to watch. I talked about a few of them, but you really want to dig into where the leadership has been. Microsoft building a base below the moving average. Nvidia below the moving average. Tesla we talked about. And then if you dig in to what the really where was the 2020 bull market, what drove this huge amazing bull market, all of those names are dead. They've moved on from those names, and it shows in ARK down 50% from the high. And I don't know if you've ever seen the correlation with this versus the NASDAQ in 2000. It doesn't paint a pretty picture for where ARK might be headed. It could go a lot lower, a lot lower. I'm not saying it has to. I'm just open to that possibility. I'm open to all possibilities. But right now, this is just not acting very well. And there's no liquidity in those names, the names that ARK owns. That they just trade terrible. When the market bounces, they don't bounce. When the market goes down, they go down. They're having bad days. So and then this, getting back to my point, there's the top in ARK on 212 or 219. PRNHX. There, that one. LAGWX, I think that's Lord Abbott, another great fund. I think that's 212 as well. Right. So there's a lot of correlation in these names. They all kind of trade the same. You see, they all kind of topped around that same time. The good news, let's not be a Debbie Downer here. The good news is if this is kind of this weird stealth, crazy chameleon bear market, we're almost 12 months into it. That's amazing to me. So it could come out a lot sooner than people think, right when everyone else recognizes the bear market. That could possibly be when it's ending, because it was just so stealth to the downside. Why can't it just be stealth to the upside? That's a possibility. So you have to keep yourself open to that. You don't want to give up on this. Arusha used to always say you're always 3 days away from a new rally, because if the market's going down, is it 3 days, Arusha? I'll have to ask him. Yeah. So if we get a day 1, day 2, day 3, day 4, maybe he meant 4 days, but you get the idea. You're back in a new uptrend. You get a follow through day. The market goes way down here. 1, 2, 3, 4, boom, follow through day. You're ready to go. And it will feel weird. You probably won't want to buy, and you'll probably say, well, it doesn't look right, or something will be wrong. Back in April and March of 2020, when you had that fall through day, it just didn't feel right. But I don't, again, I don't think this is possible. This is probably once in, so far in my lifetime, I've had 2 once in a lifetime bull markets, and I've had I don't know, maybe 2.5 once in a lifetime bear markets, in the 2000 bear market, the financial crisis, and the COVID one. That was, though it was sharp and swift, it was pretty nasty, super nasty. So they'll come and go, and just be flexible to them and be open to new ideas. I did mention Devon. I think this is kind of the best group. What else is it? Oasis? Doesn't look bad at all. Espo, I've tried that one before, a little too thin. Yeah, look at 13 million and not on my radar anymore. I can't remember if I bought it here or here. It probably was this one, or maybe it was there because I don't know if I'd have recognized it there. Anyways, it's just a little too thin for me. Sandridge is, I don't know, it's maybe this turns out to be a base. Fang, that doesn't look bad at all. There was one, the driller Val. I kind of lost. I was in it for this move here, and I just kind of took it off my radar. Look at that, Rars line new high, blue dot. Gosh, it just kind of took it off my radar and asleep at the wheel, which is what you can't do. I did the same thing I'm telling you not to do. But that's holding up really, really well. Hopefully you can get some kind of consolidation or base. But so there might be areas. FCX had a good day today. Let's see what the chart looks like. I tried MP. I bought it on the very first day of the year, and then this day is just too nasty. I just can't stand, a day like that. It's down 9%. At one point, it was up probably 4 or 5%. So I usually, when I get that kind of action somewhere during the day, I just sold it, and I'll watch it, see if it can right itself. But that just is a little bit. I just don't like that volatility. It's too much. There was another one. Tech. That's nothing wrong with that stock either. So it might not fit what you're looking for. Preferable, the innovative companies, the disruptors, everybody's new favorite words. But unfortunately, disruption works both ways. It works to the downside too, because those great companies can get disrupted the other way, which is kind of where my quote is going. Let me see if I can get to the quote of the week. And it's from T. Rowe Price, or Thomas Rowe Price, who founded T. Rowe Price many moons ago. But I agree. No one can see ahead 3 years, let alone 5 or 10. Competition, new inventions, all kinds of things can change the situation in 12 months. So it's nice to have a long-term horizon and want to hold on to these stocks, but just know that you don't really know for sure that it's going to turn out the way it is. And that's why having some type of plan along the way will help. So all these companies that were so disruptive and so innovative, Zoom, Teladoc, DraftKings, I've seen it. They 90% of them, if not more, come and go. It's the truly, truly greats, the Googles, the Apples, and so far even Tesla, that just keep pressing, and they're really hard to identify in real time. And I'm not the only one that believes that. So, and the next cycle will have a bunch of new names. There'll be names that we're not familiar with. Some of the older names will come back, but the reality, based on history, is most of them don't come back. They go by the wayside and stay sideways for a long time. And you just kind of sitting with dead money while these newer, more innovative companies, dynamic new industries will lead the way. All right, let's do another quote since I didn't have one previously, and it's from George Soros. Somebody calls George Soros has the least regret of anyone he's ever met, and that was a compliment, especially as a trader. You just move on. I like XYZ. I don't like XYZ. It's not acting right. I've moved on. He says, to others, being wrong is a source of shame. To me, recognizing my mistakes is a source of pride. I agree with that. I think you have to recognize that you're going to make a lot of mistakes. It's okay. There's no other way to get around it in this game. And so reverse that psychology for yourself. That's what makes George Soros so great. All right, so here's our contact information. Reach us at marcusmith.com, 800-831-2525, our Twitter handles, Facebook, Investors Business Daily, etc. Have a great week. I will be back next weekend. Have a good weekend, everybody. Bye-bye.